Hello, and welcome to myfinanceteacher.org. Today I want to have a quick look at a range of unexpected moves in commodities. I've been thinking about calling the topic missed opportunities, but perhaps the situation is not as bad as it sounds. Let's start with natural gas over here. If you zoom out on the chart, you'll see that generally over last few years, that's all the way since at least 2016, on average, these natural gas cycles last for actually on average, that's around 135 days. So the last time I looked at natural gas was somewhere over here, that's at the end of June, early July. And as by then the cycle was over 80 days old, I was expecting that we've seen the top for the cycle, and I was expecting natural gas to just continue to slide down into the cycle low over the next several weeks, as these cycles, as I said, usually last for over 130 days. Instead, since then, natural gas has actually increased quite noticeably. It's made a new high just about $4.1 versus the previous high at about $3.8. So it is a noticeable increase. And right now, the ongoing natural gas cycle is 113 days old. I don't see any significant correction anywhere within July that would be counted as the end of the cycle, meaning that the cycle is still ongoing. Usually it lasts for over 130 days. So although so far over the last month, my expectation on natural gas didn't actually play out, I still have the same expectations. As the cycle is already relatively old, I think natural gas will just continue to slide down into the end of the cycle, perhaps over the next few weeks. And after all, back then, the expectation that natural gas would not really produce any sustained gains anymore was more based on the attempt to preserve capital, because you don't really want to enter into a trade when natural gas has already increased from $2.5 to $3.8, and when the ongoing cycle is already 3 months old. Additionally, the developments since then also show that perhaps natural gas is going to cool off here for a while. One of those developments is a negative divergence on the RSI versus the price chart. That divergence is the fact that price is making higher highs, whereas RSI is actually making lower highs over the last month or so. Usually, a negative divergence is also a sign that the momentum is likely to shift from positive momentum into somewhat of a negative momentum. Additionally, we see that natural gas has already poked quite a few times above Bollinger Bands again, and the Bollinger Bands are, well, they're widening. They're not extremely wide yet, but they are widening, so perhaps these several pokes over the last week or so are meaningful. We had similar pokes during the time of the previous video, and since then natural gas did cool off, although it didn't go down into the cycle low. Let's move on to the natural gas optimism index, and it's quite high at the moment. Of course, everybody is very excited about natural gas. Is it the time to enter when everybody is so excited? I think instead, I want to enter the markets when everybody is basically swimming in all the proverbial blood on the streets. I want to enter the markets when this optimism index is at least somewhere around 40. That has been an interesting buying opportunity during 2020, 2021. And going back further into history, a buying opportunity usually comes when this optimism index is closer to 30 or even below that. So caution is advised on natural gas. Next, let's have a look at coffee. Last time I looked at coffee, perhaps sometime in the end of June. I don't really remember when was the video published. I also mentioned that as the cycle is already, well, perhaps nearly 3 months old, maybe around 8 days old, depending on when I made that video, I was expecting the cycle to generally cool down into the end of the cycle over the few weeks. Of course, nobody does know the future, but that was the correct expectation with the goal of preserving capital. Again, do you want to jump into the trade when the cycle is 70 to 80 days old? Well, it depends on how long cycles usually last. And on coffee, the cycles last on average for over 140 days. So yeah, perhaps one could have said that there is still time for another push up in coffee before it's time for the cycle to come down into its cycle low. So yeah, again, a bit of a missed opportunity over here that I didn't notice in time. At the moment, though, the cycle is already 114 days old. I think it's very risky to enter anytime right now. RSI has already been into overbought, quite deeply into overbought. The cycle is already quite late, and coffee has poked many times above really extremely wide Bollinger Bands. All of those really tell me that I would not be entering right now. Instead, I really want to wait for that cycle low. Even if coffee doesn't come down to its previous levels under 150, at least I think coffee wants to fill this gap over here that's somewhere around the 177 and perhaps come down to the previous highs at least at 167 or so into the cycle low perhaps over the next few weeks. Let's have a look at the optimism index in coffee. Again, optimism is above 70. Everybody is extremely optimistic about coffee, and again, it's not really the time to enter. This is the time to reduce your allocations, time to take your profits, although unfortunately I don't have any profits to take in coffee right now. Again, over the last couple of years, usually a nice buying opportunity came when this optimism index on coffee was somewhere around 30 to 40. And looking back into history, historically a good buying opportunity on coffee came when the optimism index was actually closer to 20. And the optimism is above 70 right now, so I don't really want to be sucked into all of this enthusiasm. Lastly, let's have a look at wheat. There is a chance that wheat actually finished its cycle over here in the middle of July, giving us a cycle that lasted for 100 days instead of the usual 120 days. 100, it's pretty close to the average duration. Sometimes, of course, we do see shorter cycles. For example, over here in early 2019, we saw a cycle only lasting for just above 2 months. Sometimes cycles stretch over here, as in late 2020, where the cycle lasted for over 5 months. So shorter and longer cycles give you an average of around 120 days per cycle, and a 100-day cycle is pretty close to that average. Given the strength of the rally since then, usually a break back above the 50-day moving average indicates a new cycle on coffee. Although there is still a small chance that, well, say coffee just drops from here back into the correct cycle low, which will finish, let's say, anywhere into 130, 140 days of cycle duration. But I don't think it's very likely. I would give this scenario perhaps a 25% chance, with a 75% chance scenario that this cycle is just going to generally continue higher, as the cycle is still relatively young at only 19 days old. So do I want to enter right here? Unfortunately, I didn't have enough time to pay attention at all the charts, and I didn't catch a low over here. So I am contemplating entering into wheat, but I'm not very certain about that yet. Perhaps I'll make my decision soon and share it with the members at myfinanceteacher.org. In the meantime, let's have a look at optimism index on wheat. It's pretty good. It did come to the level of usually good buying opportunity just below 40. That has been a level of good buying opportunities over the last 1.5 years or so. Again, going back historically, a safer buying opportunity comes when this optimism index is closer to 30 rather than 40. But 40 is pretty often quite okay as well. And back in early July, optimism did drop down below 40. And as it's at the moment only at about 54, there is still a lot of space between current levels and this red line. So there is still a lot of potential for wheat to do well into the continuation of the ongoing cycle. And lastly, let's have a look at uranium. Something interesting is going on over here. A few days ago, we actually took a position in uranium with the members at myfinanceteacher.org, as URA has actually reached oversold on RSI. And since then, you see today URA is breaking out of this down trend line it's been respecting all the way since early June. This is a very positive sign. Perhaps URA is ready to continue its rally after a bit of a cool down. We see a strong rally all through late 2020 and the first half of 2021, and a bit of a cool down over a couple of months since then. We see that during this cool down, URA did come close enough to retest the 200-day moving average in a bull market, coming relatively close to retesting a 200-day moving average might be enough for another push higher. The reason why I find what's happening to uranium kind of interesting is because if you look at the uranium prices, they haven't actually come down that much yet during this cycle. So far, the cycle is going on for 145 days. And again, if you zoom out over the last few years, on average, these cycles lasted for just under half a year. Although sometimes they do last for much shorter than that. For example, the previous cycle only lasted for 106 days. So based on what URA is doing, if URA is going to continue breaking out, perhaps that indicates that the cycle is nearly finished over here. Perhaps the end of the cycle is going to come with a bit of a cool down in RSI rather than the price itself. It did happen sometimes in uranium over here, for example, in the end of 2018. I think the bull market in uranium has only started over the last 3 years or so. Before that, uranium, as you see, has actually been at significantly higher prices. So perhaps once the bull market is being recognized over here, corrections in the uranium prices aren't going to be very severe. It's hard to say. That's why it's an interesting situation over here. A URA indicates that a rally is likely over here, whereas the usual cycle duration and the decline of RSI over here points to a cool down in uranium prices. I would actually like to increase my allocation in uranium in URA by a significant margin if I see uranium prices, say, retest at least the recent highs somewhere around 31.1. That, coupled with the strength in URA, might actually say that, well, okay, the cycle is finished, we've seen the cycle low, and a new cycle is ready to rally. Wouldn't that be nice? Let me know what you think about that in the comments below. And of course, remember to hit that like button, subscribe to the channel, and share this video with your friends. Have a nice day and good luck in your trades.